Hello and hi everyone. My name is Alif Taqwa bin Mazuki. My matric number 273308. Our group from group 9 will be present about fraud of Transmile Group Berhad. Okay, let's start. For the first part is introduction. The report is an fraud and independent audit project that involved a reference and study from the company had been selected. And the purpose of this report is to enhance the understanding and the knowledge about the way to gathering and evaluating evidence systematically, and the role and involvement auditor in some cases or scandal, and also the important audit report in the financial statement. Okay, our content in this report is: first, introduction; second, company background; next, chronology of fraud and auditors. The next part is effects to auditors, and the last part is a conclusion. Okay, so the company had been selected is Transmile Group Berhad from Malaysia. Okay, let's go to the next part. Is a company background of Transmile Group Berhad. It is found on 1993 by Gan Bun Aun. It is a public listed Malaysian company started 27 June 1997 on Bursa Malaysia Security Berhad. It provides freight transport management, holding and investment service such as transportation service, aircraft ground handling, aircraft engineering, and technical and maintenance support. However, on 19 May 2011, Bursa decided to delist the securities of the Transmile. And on 24th May 2011, Transmile Group Berhad officially become the listed company. So our project is focused on the year 2006 and 2007 of scandal Transmile. This is because that year is a lot of scandal effect the Transmile become the listed company.
Good day everyone, my name is Mo Ying Sing, metric number 276958. Now I'm gonna continue the sharing about the chronology of the scandal. The first comes to 14 February 2007. Deloitte and Touche refused to sign the annual report because they recognized that there were no documents and evidence that support the transaction related to trade receivable, sales, and the purchase of property, plant and equipment in the company and its subsidiaries. On 15 February 2007, the board approved an audit result without knowing the issue on account and not being alerted by the audit committee members of the audit issues and released the result to Bursa Malaysia. The announced profit before tax for the year ended 31st December 2007 amounted to 206.7 million ringgit Malaysia. Well, for 30 April 2007, the group failed to submit the audit account of 2006 to the stock exchange and they applied to Bursa Malaysia to delay the release of their audited accounts. Next, we comes to 3rd May of 2007. Bursa Malaysia have rejected the applications. And for the next day, Deloitte and Touche highlighted the audit issue to the board and executive committee was formed. And for 7 May 2007, the board announced Deloitte concerns to Bursa Malaysia. Then Morris Roland Risk Management Sendirian Berhad was in responsibility to the spatial audit. On 25 May 2017, Morris Roland issued an interim finding of the spatial audit that stated revenue, trade receivable, and property, plant, and equipment of the company was overstated. And for 30 May 2007, Morris Roland's interim findings were announced to Bursa Malaysia. Next, for 12 June 2007, Chairman Chim Kin Phong and another two committees members, Sukri Sheikh Abdul Tawed and also Khuddin Mohammed, resigned. So Chin Tech appointed as a new audit committee and independent directors. And for 16 June 2007, the final report of spatial audit was announced to Bursa Malaysia as for the conclusion of the finding.
Good morning, Doctor and my fellow classmates. My name is Rashnavi and my matrix number is 280677. I will now talk about the role of auditors of Transmile Malaysia. The Auditing Committee of Transmile Malaysia consists of Mr. Chen Kim Few, who is the head of Audit Committee. Second, Mr. Shukri bin Sheikh Abdul Tawab, who is the independent non-executive. And lastly, Mr. Khuddin bin Mohammed Bidin, who is the former executive director. According to Section 320.5 Companies Act, an audit committee is needed for all the companies listed under Bursa Malaysia Securities. Bursa Malaysia states that an audit committee should consist of minimum 3 members who must be directors of the specific company. Bursa Malaysia also states that these 3 members should not be a full-time employee for the past 3 years, be involved in the daily management for the past financial year, be a material supplier or a customer to the point where a reasonable and knowledgeable third party would think that the director's integrity, impartiality, or objectivity is jeopardized as a result of the relationship, and lastly, be related to anybody who is within the above criteria. According to the 2006 annual report of Transmile Malaysia, the Audit Committee's main goal is to help the board in carrying out its duties and responsibilities regarding Transmile Group Berhad and its subsidiaries' accounting and reporting processes. In addition, the Audit Committee evaluates and monitors the financial reporting process, ensures that financial information provided by the management is relevant, reliable, and timely, monitors compliances with laws and regulations, as well as adherence to a proper code of conduct, assesses the efficacy of the company's internal control system. The Audit Committee is empowered by the board to investigate any matter that falls within the scope of mandate, possess the resources necessary to carry out its responsibilities, have complete and unfettered access to all group-related information, maintain direct lines of contact between external auditors and the person performing the internal audit function or activity, be able to seek professional or other independent guidance, be able to call meetings with external auditors without the presence of the Audit Committee's executive member if it is judged necessarily. The Audit Committee's responsibilities and scope of work are as follows. Number 1, read through the following and report to the board. The audit plan, their appraisal of the system of internal controls, and the audit reports on the financial statements with the external auditors. The support provided to the external auditors by workers to examine the scope, function, and resources of the internal audit function, as well as whether they have the necessary authority to carry out their responsibilities. To examine the internal audit program, processes, and results, as well as whether or not appropriate action is taken on the recommendations of the internal audit function. To examine quarterly results and year-end financial statements before submitting them to the board for approval, with an emphasis of important accounting policy changes, significant and unexpected occurrences, and compliance with accounting standards and other legal requirements. to examine any related party transactions and potential conflicts of interest that may occur within the group, as well as any transaction, practice, or course of conduct that raises concerns about management integrity, to examine the external auditor's appointment and audit fees, as well as any questions of resignation or dismissals. Number 2, to suggest the appointment of one or more external auditors. Number 3, assist in the preparation of the audit committee report for inclusion in the group's annual report at the conclusion of each financial year. The audit committee report must include the audit committee's composition, including the members' names, designations, and directorships, the audit committee's terms of reference, the number of audit committee meetings held during the financial year, as well as attendance of each audit committee member.
Next, I will continue for involvement of auditors in the case. Then is involvement of audit in the case. The auditors examine the accompanying balance sheet as for December 31st, 2006, as well as the related income, cash flow, and equity statement for the year ended. During the audit of the year ended December 31st, 2006, there rise concerns with management and the former audit committees about the legitimacy and recording of some transactions for which they were unable to receive the necessary supporting documentations and sufficient explanation from management. There are some specific transactions like Transmail Air Service Sdn had a wholly owned subsidiary of the company, recorded revenue of about 290 million instead of 209 million. And the next one is addition to property, plant and equipment of about 15.6 million as recorded in task book, which matching credit entries against the amount owned by TAS, but payments were made by customer on behalf of TAS for the purchase of property, plant and equipment by TAS.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. And hi, I am Muhammad Nabil bin Muhammad Hairi. My metric number is 272704 and I would like to continue the effect to auditors. So the first one that we conclude and we found that the first common law under third parties that in the situation given is the external auditor, Deloitte and Touch refused to sign the annual report on 14 February 2007 because they recognized that there were no documents or evidence supporting the transaction. So the effect is the third party must prove the first one, the auditor had a duty to the plaintiffs to exercise due care, and the second one is the auditor breached that duty by failing to act with due proportional care, and the last one is there was a direct causal connection between the auditor's negligence and the third party's injury, and the third party suffered an actual loss as a result. So the next one is common law contributory negligence. So in the situation given, since 2004, the corporation has inflated its revenues and profit with an annual account of 622 million, and the fact is that the firm actually lost money rather than making the profit that was shown on the financial statement. The corporation was discovered to have made 189 million in payments without supporting payment vouchers. So the effect, the auditor contends that the client's own activities either cause the loss that is the foundation for damage or interfere with the audit's conduct in such a way that the audit was unable to determine the source of the loss. And the next one is the penalty is to fix the damage, but it must establish that the auditor owed the plaintiff's duty of care and the auditor pleaded with guilty of negligence. At the same time, the plaintiff suffered a loss due to the auditor's negligence with which the company overstated their revenues and profit. So the conclusion that we have learned throughout this project that the position of auditor is critical to a company's success Besides, we can describe the role of auditor clearly and why any company should have their own auditor to audit the entity's activity. Also, as an auditor, we should conduct ourselves professionally and with integrity when providing the audit opinion in order to prevent controversy and fraud that might affect our career and reputation. With that, I thank you.